Let's talk commodities, and first of all, oil. It's extending gains after the longest quarterly rally in a decade. That's as a slowdown in American drilling added to supply risks, and President Trump and the Saudi Arabia king discussed market stability during a phone call on Saturday. Well, joining us now is Stuart Wallace, who's Bloomberg's executive editor for energy and commodities. So first of all, Stuart, how's the market interpreting the call?
I mean, we obviously don't know the details of the call. I think we're going to take a brave stab at it and said they probably spoke about oil amongst other things. So in terms of oil, what Trump is after here is more barrels. Now, Saudi Arabia does have those barrels, but really the test at the moment is how high can they get? It's been, pretty much since the invasion of Kuwait that they've had to go this high. They're going to be absolutely maxed out, and the question is, can they sustain that over several months? The secondary question is, if something else goes wrong in the world, i.e. the collapse of Libya or the collapse of Venezuela, or strife in Nigeria, have they got enough spare capacity to make up for that as well? And that's where the real doubts are. You're looking at the price today, it's going up.
Stuart, the rally, will it continue? Will it increase to $100 or will it die down?
Yeah, I mean, the market talk last week in Singapore, where we had this huge gathering of traders and oil companies, was very much $100 oil. Now, no one's quite yet predicting when that might happen, or their certainty in that happen. But if you look at the options market, people are clearly hedging themselves already and trying to de-risk that element there. And they're absolutely right. Again, for all the reasons we discussed, there are a lot of risks out there and some real uncertainty about whether OPEC or other producers can meet that demand.
Could it come as quickly as the fourth quarter, that jump in price?
Yeah, I mean, that is going to be the critical moment, because that's when Iran sanctions kick back in, November the 4th. That's when demand tends to peak, because, that's just that time of the year. And as I say, there's really not that much spare capacity in the system. The Emirates probably has a little bit, Saudi Arabia probably has a little bit, and there are bits and pieces elsewhere. But does all of that add up to replace those lost Iranian barrels and those lost Venezuelan barrels? And I don't think anyone has great certainty about that just yet.